Denita Wawn, thanks for your time. The policy announced by the Coalition obviously already picked up by Labor. Your thoughts? Any issues you see with it?
Well, we congratulate the Coalition in this policy and also welcome the fact that it's been backed by the ALP so quickly. We've always been concerned with the deposit gap is the really critical issue affecting first home owners. We know many of them can afford to pay off a loan. It's just
with the low interest rates.
Gap. That's right. So the issue has really been what is the best policy mechanism to assist those who are finding it hard to get into the market. And we've viewed that these first homeowner grants are the way to go. They're a targeted approach. We know it's worked in many state jurisdictions, so it's great now that we're considering a federal policy as well.
Scott Morrison was asked about the modelling. He said, look, nothing definitive really. Presumably it would have some upwards pressure. If you're talking about 10,000 people a year that couldn't get into the market unless they took on mortgage insurance, which a lot of people balk at, you'd expect some upward pressure. Is that the logical conclusion?
Look, it depends, I think, in the markets. We've got to also recognise that at the moment we're seeing nearly a 30% decrease in the building industry at the moment in terms of residential building sales. And so we need to ensure that we can actually provide stimulus to that. So it's hard at the moment to determine. I think a macro figure is very difficult to work out, but we know, I think, from the state experiences that by and large the positives outweigh the negatives and it assists those who can't otherwise get into the market. And we're looking at a small group. So the question is, how big would the impact be on the overall housing sector? It is unknown, and obviously more work needs to be done.
Yeah.
But the focus is very much on those targeted approaches that we think has worked in the past and should work in the future. So
when you say more work needs to be done, so is that to properly understand the policy? It's obviously come very late in the campaign.
The policy generally is very much in the right direction. The question now is making sure that you've got all the detail worked out, that we're ensuring that it actually is getting to the right people. But as I said, we've known in the past that this has worked well with state approaches, the New Zealand approach. So it is a step in the right direction, but we know that more needs to be done. Master Builders Australia has been calling constantly for resolving some of the excessive land costs, for example. The state governments and local governments still need to address the issue around shortage of land supply, high developer charges, and also restrictive planning practices. So the issue of housing affordability in its broadest sense is got to be looked at in a holistic way, and that's why we also congratulate the government in looking at a proper assessment of the housing market and what we need is really important in making sure we're taking a proper long-term approach to the residential needs of Australia.
The land aspect's a bit of a constant push-pull from the states and federal governments, generally speaking. Is this going to be resolved in any way, or is it ever thus? We
would like to think that all levels of government could come together and work some of these issues around land supply.
Is that needed in some way? What, like a big COAG that really digs down into these issues, put everything on the table?
Absolutely, and it's what the Henry Tax Review actually recommended. They said don't look at housing taxes until you have resolved some of the key land supply issues. So we think it's really important to whoever wins on Saturday that they continue to focus on the issue of land supply and the exorbitant costs that have been hit in terms of land costs over the last decade. It has to be addressed.
The big policy, of course, in this election, the last one, is Labor's negative gearing policy. You had modelling without the grandfathering factored in. Is there any update on that?
Our modelling stands as is. We didn't need to factor in grandfathering because we're looking at future investment. We've asked our economists about grandfathering. They said whether you put grandfathering in or not, the results are exactly the same because what we were modelling is what would occur to future investment in new homes. So the figures remain, as our economists said, less new homes and less new jobs under the ALP model.
Because if you look at the policy as is, what you'll create on the day you do enrol this Labor policy, if it happens, is a whole host of landlords that are actually incentivised to hold onto their properties. They get negative gearing and they get capital gains tax discount. Wouldn't that reduce the number of properties going onto the market and have some impact on that modelling?
No, it's not, because our focus was all about the ALP policy and promise that we would build more new homes and have more new jobs under the ALP policy. So our focus was on that promise to our members that more new homes would be built under their policy than under the existing policy. And our modelling says not, because the combined impact of negative gearing and capital gains tax changes results in people being turned off the housing market in terms of an investment option.
So the negative gearing, obviously Labor's argument is you can only negative gear on future investments for new houses after the start date of their policy if it happens. You would expect then, because we've currently got most people, the figure's a bit debated, but what, in the 80s or something, 80% of investors go into existing properties, you'd expect some of them to go into new properties and have some positive impact in a net sense.
You would think so, Tom, but that's not the case based on our modelling because of behavioural changes. When you look at negative gearing combined with capital gains tax, you cannot halve the current discount on capital gains tax and think that it's not going to have an impact, whether it's a new home or an old home. You are having a significant increase in housing taxes, which, according to our modelling, suggests that whether it's a new home or an old home, people will be turned off the housing market as an investment opportunity.
Okay, so it's often spoken about the housing policy, but the negative gearing aspect and the CGT discount applies to all investments. The money's got to go somewhere, right? Where does it? Are you saying it goes out of housing and into something else, and why would that happen?
It goes out of housing into something else simply because they're looking at alternative assets, asset investment, or not investing at all because of the capital gains tax. We haven't modelled anything beyond the impact on the housing market, so it is hard to know right, unless you've done the modelling where that goes.
But if money's going to come out, because it's about obviously the attractiveness of investing in housing, you're saying less attractive.
Yes.
It is equally less attractive investing in shares, isn't it? They've got the same rule changes apply to shares.
That's correct.
So why would money go out of housing into shares if the disincentive applies to both?
Because it's combining the negative gearing with the capital gains tax.
But they both apply to shares as well.
We have not modelled the negative gearing and capital gains on the other asset classes. The modelling that we have done is looking at whether or not we would have more new homes, and the modelling suggests otherwise. How that then impacts the rest of the investment market, could not answer that. We have not done the modelling.
But don't you need to look at it holistically? Because you're saying there'll be less investment in housing overall, including new housing. That money has to go somewhere. If you're doing modelling, it would have to say, this is now more attractive, that's where they're going to put their money. You're saying it will go more into shares, or people will just put money in the bank, even though you've got very low interest rates? It has to have an answer, doesn't it, for where this money goes?
The question is something that we have not modelled.
Okay.
We simply modelled the impact on new homes, which was promised by the ALP. The modelling suggests that it will not, and in fact will have less new homes. As to what the investor market does is unknown as to whether or not what that impact is and where they would invest. But certainly the conservative modelling that was undertaken by Cadence Economics suggests that they would no longer be interested in the housing market. As to what happens after that is something either someone else can model or alternatively we will see if ALP get in on Saturday.
The other ALP policy they point out is the 250,000 affordable homes to be built and the built-to-rent scheme as well. That'd have to have some impact, wouldn't it?
That's right, and we congratulate...
Would that shift the previous figure, for example, on 42,000 fewer dwellings? It's a pretty big figure, 250,000 homes.
We haven't modelled the build-to-rent, but we have congratulated the ALP on the build-to-rent. We think it is a good policy and it is important that we provide tax incentives to institutional investors. But we are concerned that they will predominantly focus on the big capital cities and what impact does it do on regional and smaller capital cities where there's not such a strong market for build to rent.
Would it shift those figures again of that previous modelling if this?
It may well do, and we have not done the modelling on that. Our big focus is ensuring that we have enough homes in the current Australian residential market to ensure that we're meeting all housing needs. We know that in the current market we are about 20,000 homes annually shortfall of meeting population demands in the future. So we want to ensure that there are as many tax incentives and other incentives as possible to ensure that we're building sufficient numbers of homes for people to live in.
Right.
So our argument is the ALP policies on build to rent are great, their ALP policies on social housing is great, but we will see a shortfall if negative gearing and capital gains tax is applied, so we need to keep that back on the table.
We'll see on Saturday what the voters decide, but we could have a situation where the ALP is in government in some form, that's the bookie's favourite if you like, and then the Senate left to deal with some of their policies. Will you be talking to them about, for example, the ALP has spoken about excesses in this, and even Scott Morrison has as well, that perhaps capping negative gearing might be something more palatable to you?
Look, our view is first and foremost keep every tax incentive on the table. If Labor wins and if there is a discussion in the crossbenchers post the election and that there is discussion on alternatives and they are open to looking at alternatives, of course we need to have those discussions with the crossbenchers and the ALP. But that is something that we will deal with when and if things happen that way after the 18th of May.
Well, no, soon enough. Denita Wawn, thanks for your time.
Thank you.